All right, trading addicts, welcome to another Casual Friday educational webinar. Today's topic is trading psychology. And this should be an exciting one. It's something that we all, at some point, to find success in our career, need to deal with, need to overcome, need to come to the realization of certain elements, and need to find ways to better fix our minds for this sport. As I mentioned earlier today, I deal with the same things that you deal with. You deal with the same things that I deal with. Things like hope, fear, greed, complacency, lack of confidence, overconfidence, all these things. And we need to talk about them today. We may not all have policies in place that deal with them, but we're all trying to improve, right? So your contributions are valuable in that regard. They're going to help dictate the direction that we take with this. So if you have any questions, please submit them. I would appreciate it. All right. We got a bunch of different requests last week on this topic, and we won't necessarily hit them in any specific order. I mean, I just kind of threw some things together. So let's just get started. And I want to start with just trade mechanics. Okay, so these four elements, starting from the top, is your trading strategy. Naturally, you've got to have some sort of strategy or approach that at least gives you comfort in thinking that you have some sort of edge or belong in the market, right? The next is the execution of that strategy. Okay, well, if you let's say you're a good stock picker, or you've got a strategy that's high probability, or you've got something that's been proven to, back tested to work over the long haul. It's how you execute it in following your trading plan and your trading strategy. But then trading psychology comes into play, right? And so I don't think that in this group we have anyone that would label themselves as like a purely mechanical trader. Mechanical traders are great because they're like robots, and robots are not programmed to have emotion. But to an extent, I think everybody here on some level or another is discretionary. You may argue that and say, well, I buy 3 green arrows, I sell 3 red arrows, I buy MACD crossovers, I sell MACD crossovers. Jeff, that's as mechanical as it gets. And I would say, not true. Because you have to decide the instrument in which you're trading. Why would you, let's say, take this trade in Apple versus a Google, or an SPY versus an IWM? So, in any little bit, at some point, we're all pretty well discretionary. And when you leave decisions up to you, that's where trading psychology comes into play. And so, if we've all got a trading strategy, which we do, we're here every day trying to execute on that. We've done that. Now we need to come up with some procedures to master trading psychology. And if we can do that, then that makes us a consistent trader, which is what we're all after, right? That's the end game. That's the goal. This is a really ugly, pixelated image here, but it was an image that I've used in the past. I think it's important enough to discuss it. But it's really cool because this covers the mentality of a trader's thought process, okay? So, when prices are already on the swing up, we go from optimism to excitement to thrill to wow, I am smart to euphoria. And that's, they say the point of maximum financial risk is when, just take for example this week. Started off pretty good, started off really good, and then 2 days ago, I guess I got a little anxious because everything was working and figured, wow, I must be doing something wrong. Something's not right here because everything's just taking off. Everything's blowing up. And it's at that point when we reach that euphoria when, yay, every trade is working and I've reached success. And then you might even stop there and think for a minute, you know what? I'm a pretty smart cat. And that's when we're at the point of maximum financial risk. From that point, all you have is downside. That's right, Kimmy. It's the exact same thing. That's what market sentiment cycle is it's based off the thought process of traders. So from that point, we get to anxiety. Today's anxiety, right? We see more downside. It's going to turn to denial. It's going to turn to fear. We leave winners on the table where we're losing gains, losing gains, losing gains. And then pretty soon, that's where denial turns to fear, is when those gains now turn to losses. And those losses get really big. They turn to desperation. They turn to panic. They turn to capitulation, which is where we finally get out. And then it turns to despondency. We get down to despondency and depression. Oh, I hate trading. This sucks. This market's rigged. Everything's broken. I don't belong here. I'm going to go put my money in a mutual fund, or I'm done. And then that point is the point of maximum financial opportunity, right? When everybody's depressed, every time, and I always try to make note of that in the room, when it gets really quiet and it's just, you can feel the pressure in here because everybody's mad, everybody's despondent, everyone's just mad and just totally upset about what's going on. That's the point of maximum financial opportunity. We see a little bit of that going on in here today. But then, that just like the psychology of trading and the sentiment cycle, which we're going to talk about in the future, that turns to hope, relief, optimism, and back to excitement, thrill, and euphoria. So it's always a cycle, a circle, and it never changes. That's how we think, and we need to recognize that. We need to just know, though, when we get to those points of euphoria, hey, maybe it's time to cash in. Maybe it's time to take all the chips off the table, let markets pull back, come in a little bit, and then when everybody else is fearful on days like today, days like today when you can sense a little bit of despondency, a little bit of depression, we got some traders in here saying, man, I want to buy this today. I want to get in here and buy some of your fear. That's the killer instinct. That's what we've got to try to do, is understand and recognize when we're getting that sense of euphoria. What does that mean? Probably time to reel some in, right? That's what I've been trying to do over the last couple of days with some of those, great big winning positions that we have, is just kind of slowly take some off into strength while not adding too much, keeping some skin on in the game in some places that aren't, some different areas, some things that I don't normally am actively trading in. But anyway, so that's the trader's thought process. Another point on that is the mental patterns of a trader. I'm going to make sure you guys can hear the volume here. Let's see how this works. If you guys have seen this, don't ruin it for others, but you got to watch this.
Uh-oh. It's no big deal. It's probably not even quicksand. I'm going to have a good laugh about this tonight with the guys. Well, this is just perfect. Stupid quicksand, stupid jungle. I want to bite someone in the face. Mother. Ah, that stupid jungle. Are you there, God? It's me, Giraffe. Listen, if you would just give me a mulligan on this quicksand thing, I promise. No more peeing on your shorter creatures. But you get a deal? You know something? I'm cool with this. I bet heaven has all the tender leaves I can eat, and everyone gets their own Slurpee machine. Yeah, take me, sweet death. I await your loving embrace. What? I think I hit the bottom.
All right, so has anybody seen that before? So in my opinion, did everyone heard that okay? Okay. So a lot of parallels you can take from that and take that through the process of a trade that turns to a loss, right? First thing is we start denying, well, let me just give it a little bit of wiggle room. We'll see what happens. Next day, boom, market opens up like on a day like today, really adversely to us. Now we're in over our head. We get to the point where we're trapped in this loss. We don't know what to do. So what do? We start bargaining. We start start praying. Hey, if I can just squeeze out of this with the gain, I'll never take an aggressive entry like that again. Whatever the case may be. But through that and then we get to the point where it's at the worst loss. And by the time we finally accept it, okay, so I've lost all my money, whatever. By the time that we capitulate mentally is the time where it's bottomed. Okay? We are, oh gosh, there's a clip I would really like to show you, but it's borderline inappropriate. Here's an assignment for you. Since everyone may or may not want to check this out on their own. There was a money that was released a few years ago called Two for the Money. Anyone remember that? Al Pacino, Matthew McConaughey, Rene Russo. There was one particular scene in that movie that they gamble. They're a gambling pick touting service, right? And so McConaughey's like the hot shot sports handicap, right? Picking his games, picking his spreads, right 80% of the time, whatever the case may be. And then he just, he gets all this success and he turns to crap. He can't get anything right. And he's like 0 for 10. So Al Pacino, who is supposed to be the guy in charge, takes him into an AA meeting. And they go in there and they're watching these people who are out there pouring out their heart and their souls, just saying, I'm a habitual gambler. I can't stop. It's like an addiction, and I keep going. I keep losing. Every time I tell myself I'm not going to do it, I'll scrounge up the rent money. I'll go out and I'll gamble it, and I'll lose again. And they turn to Pacino and they ask him, if he's got any comments. And he's like, I've been coming to these things for over 20 years, and honest truth, I've never, or no, it was based on the alcoholism, right? So he's like, so I'm sorry, I messed up. These people were talking about how alcohol has messed them up and whatnot. Anyways, he says, so I've never drinking a drop of alcohol. He's like, but I'll tell you what's wrong with everybody here in this circle is that you guys are all a lemon. You guys are all programmed wrong from a psychological standpoint. You guys actually like the feeling of losing money. That's why you like the feeling of that because you keep doing it. So to draw that, you have to watch the scene. Go Google it. Go look it up on YouTube. It's a really interesting scene, but it kind of talks about the parallels of how we're from a mentality standpoint. The markets are programmed to know how backward our thinking is. By the time we panic, those are buy opportunities. By the time we finally get into a trade, things are ready to start going down. The way we come to the market is we are exactly the opposite of what is needed to be successful. So I'm going to encourage you to look at that if you can. I mean, it's a great little scene. It's one that I'll always remember. In fact, I think I wrote an article about it on Option Addict long ago, like a 1,000-word essay on it because I thought it was that powerful. But in terms of the different emotions that we go through, I want to talk a little bit more about understanding fear. So fear is a natural reaction to what you perceive as a threat. So in trading, how many of you experience fear on a daily, weekly basis? Weekly, okay. So we have to identify what it is that we're afraid of. And we have to come to terms with why we're afraid of it. Is it the fear of a loss? Is it the fear of success? Is it the fear of missing out? We're always dealing with some sort of fear because we perceive a threat. So you've got to take a moment and identify. You got to identify what it is you're afraid of. And Crystal brings up a good point. Fear in the end that I can't do this successfully. There's fear of success, right? Fear of a loss versus fear of a gain. We're going to talk about prospect theory in a minute, but for the most part, the thing that I've dealt with the most is fear of failure. Let me give you a little bit of background. So I got started at this at a really plentiful time in finance. Markets were just doing things they don't typically do, and I was part of the excess that was devoted to our industry, which we're trying to rid ourselves of right now. But I developed a skill set there, and I managed to stay around. So in 2003, I came on with a investor education group because I realized this, the next few years were going to be pretty outstanding, and there was going to be a lot of opportunity for individual investors. So I wanted to try to find an opportunity for me to get up on a soapbox and start teaching people how to be successful, how to make this work. And so I look at one of those equally great times in the last decade where the market was really, really easy. I watched people that would kind of come in, learn, but they would never pull the trigger. I taught people one-on-one and still had relationships with them for years where they had never gone out and done more than just a paper trade. I mean, they dumped tons of money into their education but never pulled the trigger. And the reason why is because they were afraid to fail. I mean, think of it. Ever since I was a kid, being a male, and you have your father there to always teach you to be a winner. We don't want to lose. Losing isn't part of the game. You go out there to win. You don't go out there to have a good time. It's all about winning. And so that's for a lot of us that we're only conditioned towards having to succeed. We're not really conditioned on how to cope with failure. So we have to try to isolate and identify the fear, what it is. If it's fear of being successful, if it's fear of failure, we have to think through the process, and we have to start making plans, like structured, in some instances, structured business plans on how to avoid that. Well, if it's fear of losing money, well, what can we do to curb that? We can limit what we lose. We can make sure that we're only risking money that can be just as easily thrown away or donated to another cause. I think it was Gene that said yesterday, and I'm going to quote this forever, but Gene made a comment that said, I just figured that, this is money that I'm going to lose anyway. So it's been much, much easier once I got to that point to deal with he's trying to actively trade and then trying to get around a work schedule. But there's such a lot of truth in that. And I've told people, the aha moment for me in my career. I mean, I had some big ups. I traded in the late 90s, made a lot of money for no good reason, no skill, just a product of opportunity, and then gave a bunch of it back over the course of the next few years, thinking I had any idea what I was doing when I didn't. So I took that point, from 2000 to 2002 to watch, learn, trade, lightly, read, study. That was my tuition. I set aside, put some of the money away, and then said, okay, well, I got to take what I have here and I got to make this work. And if I lost this money, I figured I was going to lose it anyway, because I shouldn't have made it in the first place. Crystal, that's a great comment. She says, Robert Kiyosaki says that if you don't fail, you're not trying hard enough. You're right. I look and think that over the years, I've learned more from my failures than I have from my successes. I mean, that's what molds us as individuals. I think that's what molds our characters is the feel of failure. I have always viewed that I mean, I've played competitive sports all my life, so I view failure as an opportunity to go back to work, to train harder, to get better, and that next time I have that same opportunity, I'm not going to fail. I'm going to, I'm going to succeed. And that's determination. That's commitment. So throughout the conversation here, let's try to talk about some of these things, fear of loss versus fear of a gain, or fear that I can't be successful, fear that I don't want to fail. These are all natural tendencies. But at points, it's kind of like golf, at least it's like that for me. Every now and again, I have a great swing. I hit the ball straight down the fairway, great shot, and therefore I'm always chasing that success. I'm always chasing that one shot, and that's what we've done here. We've all had a successful trade. We can go back and review that and see, what it was that was successful about that trade, and we can always be working towards trying to attain that same level of success. Let's move on to the next topic here, which is understanding greed. Okay, greed's on kind of the opposite spectrum, but I would say that over the years, I think I struggle more with greed now than I do with fear. But a lot of that's through experience. I feel like I've found some levels of success. I've found something that works, and now it's just all about struggling to be consistent with it. But when I think of the word greed, the quote that resonates in my mind is pigs get slaughtered. You guys have all heard that, right? Bulls make money, bears make money, but pigs get slaughtered. And the reason why is that greed enables us to hold winners too long. Okay? And so our natural instinct as traders is to always do better. I can always make more money than the last one. There was a good conversation with Grumpy Steve this week. His moniker is great, and he carries it really well, but kind of has that keep holding for the big game, but it never comes. So, and I think that's what a lot of us try to do. We're always trying to succeed. We're always trying to do better on the next trade. We're always trying to make more money than the last one. So we need to recognize where greed can impede on our success. For example, I think greed over confidence, pretty much the same thing in my mind. I get greedy, I get overconfident, I have the tendency to take more positions. Well, what happens? Maybe somewhere I slip and get a bad read on the market, or I'm not prepared for something moving adversely to me. What happens? I put on more positions, I've exposed myself to more risk, and then, I'll have one day where I draw down, 3, 4, 5%. But if we understand that that's the case, that we hold winners too long until they finally turn into losses and big losses and we completely blow out, well then we have to have mechanics in place to curb that, right? So whether that's something simple like a trailing stop, like once a trade has gone profitable, moving it to break even, once it's gotten more profit than you had anticipated, taking a portion of the profits. That's why it's always important to come into every trade with a plan. Some of the best trades in terms of like learning experience from the group are the ones where we say, okay, well, we had this stock, it's run up and hit our target. Now what do we do? Well, let's watch it. Let's make sure that our target was right. What if the market wants to keep going? I want to make sure I give myself an opportunity to make more money. But if at any point it starts to slow down or it starts to hold at that level, presents a good opportunity to take the profit, book the gain. And what can we do if, let's say, we're undecided? We can use a fail-safe. If we're comfortable risking a portion of the profits to make more money, but still, in the long run, still lock in a good portion of that gain, then we can bump up a stop or put in some kind of a fail-safe there to do that, so that it doesn't turn into a loss. Let's talk a little bit more about prospect theory and how that relates to this whole conversation. So prospect theory suggests that people express a different degree of emotion towards gains than towards losses. You guys have heard me say that time and time again. We feel more pain from a dollar lost than joy from a dollar gained. That's just how we're built. Okay? So take, for example, I did a little bit of work as a broker long ago, but the typical phone calls that I get from customers are what kind of phone calls? If a customer's calling, if you're calling your broker, what are you calling him about? Why did you put me in this stock? It's losing all my money. What is going on here? What are you going to do about it? Why are you losing my money? But yet, if that same guy puts you in a stock that's doubled or tripled, are you calling him? Are you calling your broker and patting him on the back, or calling to say, we got this big gain. What are we going to do? We're going to book it. Yeah. I used to get that all the time. You are the worst. This was a horrible idea, but I don't recall. There were women would tend to call every now and again because they would get. I had a few women that would call and they would get really excited. Not to be, male versus female here or anything like that, but I did get a couple calls, where they were excited, wanted to book some money. Anyways, but they were the minority. I mean, the calls that I get were very, very small in response to the calls that I would get for losses, right? So individuals are more stressed by prospective losses than they are happy from equal gains. So, if I produced a loss, I'm going to hear about it. It's like the days in the room where we've got 5 trades on, 4 winners. The winners are doing great. I get one stock, like Priceline this week, just, complete blow up there. There's times where we'll have a lot of good trades on, and then yet the one ticker that comes up is the Priceline, and that's because we get more mad at the loss than we do get excited about the gain. That's just how it is. So prospect theory also explains why investors hold on to losing stocks. It's because people often take more risks to avoid losses than to realize gains. So I'm going to hold on to this loss because I think it's going to turn. It's going to turn. Oh, 100% loss. Rather than taking the risk to hold on to a gain, they rarely do that. They gamble with winners and they're risk adverse to losers. For this reason, investors willingly remain in a risky stock position hoping the price will bounce back. Gamblers on a losing streak will behave in a similar fashion, doubling up bets in a bid to recoup what's already been lost. So I used to do this live boot camp, as they called it. It was a 3-day or 4-day boot camp. We would do it up in Park City. We did some of it in our office. We'd have these traders come in, and on the day where we talked about psychology and money management, we had this cool game where we had a bag of marbles. Anybody play the marble game? And there were, in the bag, 60% of the marbles were a dark color, which represented a win, and 40% were a different color, which resembled a loss. Gave everybody a spreadsheet with $5,000. Said, we're going to randomly pull marbles here that will represent a gain or a loss, and you have to basically bet on each pull. And you've got a 60% chance that you're going to win. So the odds are in your favor. How much are you willing to bet? And typically half of the class would blow up by the 4th or 5th pull. And 75% of the class would lose money. There would be a small minority who would make a little bit of money, break even, and there would be 1 or 2 that actually did really well. And those that did well were the ones that would do, bet 500, bet 500, bet 500, bet 500, bet 500. But the guys that would blow up were the guys that bet 1,000. Oh shoot, I lost money. Bet 1,500, lost again. Bet everything, 3 losses in a row. I'm out. They would keep adding to, keep doubling down, keep adding to the position size while they're losing instead of doing the inverse. And the guys that usually did the best were those that increased their bet size as they were right and then scaled back when they got into a losing streak. The scalable approach. So, despite our rational desire to get a return for the risks we take, we tend to value something we own higher than the price we'd normally be prepared to pay for it. So these are all elements of prospect theory, and it's important to recognize that we have those same tendencies, and because of that, what are some things that we can do to curb that, to avoid that? Just try to be more risk adverse to losses. Start scaling out of losses when you're wrong, as opposed to scaling out of winners. Put stops in place so you don't take the worst case scenario. Be disciplined to an exit strategy. And then things like position sizing. Those are all things that are going to help with prospect theory. So let's keep moving on here, but I want to talk really quickly about overconfidence. So people generally rate themselves of being above average in their abilities. They also overestimate the precision of their knowledge and their knowledge relative to others. Many investors believe they can consistently time the market, but in reality there's an overwhelming amount of evidence that proves otherwise. Overconfidence results in excess trades with trading costs denting profits. This happens to me all the time. I mean, for a lot of time we've got positions that are going to be correlated to the market, and not all the time do we have a good read on the market. I'd say we have a better than average read on the market, which gives us a slight edge, but at any time those situations can change and they're completely out of our control. So we get to that point where we're overconfident, too many things are working, and then we start putting on too much risk, and then that's where we can take the biggest hit, right? So it's important to also have fail-safes in there to not be overconfident, to respect the market at any given times, and know that even though we have abilities, we might be able to read markets, we might be able to predict some stock movements, and we know we're not going to be able to do that 100% of the time. So if we can't do that, then what's the backup plan? What's the backup plan if we don't have a market read? How are we going to continue to be able to take money from the market? And that might be something as, how many of you here say that you're comfortable with change? Let me ask you that. I think most people are not comfortable with change, and so therefore I got to say that I'm, to an extent I'm that way. So that, when I know that the market gets to a level where it's not conducive to my trading style, I keep going. I keep forcing the same stuff. And that right there is overconfidence at its finest. When I know volatility's up, when I know markets are correcting, and I know that buying out of the money options is not a high probability strategy, in market conditions like that, what I should be doing is adapting and changing. And by not doing that, I'm being overconfident. So the answer to that is, be willing to change. Have a game plan. Be able to see those changes coming. A couple other things. I'm kind of spending a lot of time here, but we also talked about how to deal with pressure and stress, and this can include things like breathing difficulty and palpitations, tense muscles, muscle cramps, trembling hands, sensitivity to noise, loss of appetite, loss of sleep. In some way or another, you've gotten into a position where you were up at night. You guys hear me. I mean, sometimes I get stressful during the day where I'm ready to take a trade, and you guys hear me doing the Darth Vader over here. I know Eric had a heart monitor on during the day, so that he can tell when he gets to a point where he's getting too stressed out to, take a break, step out, go for a walk. It's a stressful career that we deal in, guys, and so we've got to have ways to cope with that. I have to exercise morning and night. I have to spend a certain amount of time just away from the market. There's certain things I have to put in to be able to deal with this. Otherwise, we deal in a high stress and a very unhealthy, profession here. We sit in front of a computer forever and we deal with stress. So we've, having things like a good diet, making sure that you get to bed early, get plenty of sleep, supplements to provide energy, to cure depression, whatever the case may be. And then, even something as silly as breathing exercises. I know it sounds funny, but I mean, these are all ways that if stress is if it's problematic for you, then, take a break, do some exercise, have something healthy to eat. All those things are going to be better on your body. Now, I want to talk really quickly about fear of success. So I mentioned earlier, we're conditioned from our youth to be winners. Many of us haven't been coached on how to handle failure. Many of us are fearful to take the plunge because we don't want to lose, rather than we should want to take the plunge because we want to succeed. So I found this little questionnaire. I think this was from Steenbarger long, long ago. But it's a good way to tell, if you are fearful of success. Have you been taught to do your best to be a winner, to always look good, or similar sentiment? And I think for many people that's true. Do you have a fear of change? A few of you said, yeah, I have a fear of change. Do you fear the unknown? It's funny, I had somebody email in, and they were saying, well, what if this happens in Europe? Or what if the debt ceiling this? Or what about the election happens here? And what if next year we go into a recession? And what if, it's like, well, if that's the case, why do you trade? How can you take any sort of a position asking those kind of questions? You're in the wrong business, pal. Next, do you feel the need to win at all costs? Are you willing to take responsibility for doing what it takes to achieve successful results repeatedly? Are you willing to put in the time to study charts, to document your trades, to study your losers, to study your winners, to, spend time and track those that are having success and figuring out what they're doing and how you can apply? Are you afraid of looking like a loser? Do you trade so as not to lose instead of pushing the boundary of your comfort zone? Again, the last thing in life I try to do is get comfortable. If I find myself getting comfortable in something, I try to take up another task or put myself in a situation where I've got some sort of a new challenge. I need to always feel some sort of a challenge in life. And last, do you routinely hold losing positions longer than you should? I think for most people, that's the case. We can identify that they're wrong usually pretty early on, but we have a tendency to just in general risk losers in potential for them to turn around into winners. So, the secret to success, though, guys, is commitment. Is already deciding that, what, I am scared of not being successful, but I'm going to do what it takes, and I'm going to keep going at this until I get it right. And that could be a year, a couple of years. It could be 5 years, a decade. I mean, for me, it's been a challenge my entire career. I've had some great strides. I've had some bad strides, just like anybody else. It's all in how you deal with them and how you push yourself to keep getting better. That's the secret of success in this. So we've talked about a lot of things, and I wanted to title this session, Trader Psychology Part 1, because we can take some of the aspects that we've talked about here today and down the road, in a couple of months, come back and review and do it again. So if you guys have any questions about some of the things we talked about, let me know. I mean, I want to talk, specific traits, things that can do to help. And I think we've done some of that to an extent, but there's such a vast, universe of topics when it comes to trading psychology. But the most important thing is to at least, number one, identify what our bad characteristics are. And, along the way, we talked about a few things to help change those. And most of it has everything to do with, your trading plan and your approach. So I know the market's got a little bit of movement here to it, so we'll take a few questions, and then, we'll kind of get back to a quick market update, and then we'll, keep moving forward. All right, well, dead mic here. So I know it's a fast day. Looks like people got some trades moving in and out. So what I'll do is I'll stop the recording here. Thank you guys for your time.